Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Wednesday, gang. Let's take a look at what we've got going on here in this market before we dive into the questions. A couple things that I continue to focus on is I'm really very bullish equities. I mean, I have been for some time. And if you haven't checked it out yet, if you head on over to the Simpler Trading YouTube channel, you'll see just pretty much exactly what I think, bullish outlook. And I walk through the reasons, right? It's one thing to say you're bullish or bearish. It's one thing to have an opinion, but what are the things that back the opinion up? And if you haven't already checked it out in the last couple of weeks, or maybe you've never checked it out at all, make sure you check out. Here we go. I'm trying to get the Countdown Trader. There we go. Check out countdowntrader.com. Really great material there in terms of what I'm looking at, why I'm looking at it, and the kinds of things that, overall will be needle movers for us as we go through this year. What are those things that we need to watch? And one of them for me is looking at copper and crude. So stay tuned for that one. If you're wondering, Rob, yeah, what is happening with commodities? We have some exciting things happening just even beyond the S&P Nasdaq Dow, and it's not even the Nasdaq that I'm most bullish. So check that replay out from yesterday. Also check out a lot of what we've got going on at the Countdown Trader. Really great instructional tactics, tips, indicator use, etc. All right, that being said, as we continue to sort of just plow through January, we do have some data that we do need to be aware of. Anything that suggests inflation is leveling out, anything that suggests jobs are still holding, it's really going to be tough at this point for the Federal Reserve to say we need to be much more hawkish than the Fed Fund futures are reflecting. And Fed Fund futures are interesting. I dive into them in that update. The Federal Reserve knows exactly what the Fed Fund futures are doing. They will course correct messaging through the Fed Fund futures. It also reflects data. It's really a two-way contract in that, yeah, I do believe the Federal Reserve uses it as a tool, a messaging tool, but I also believe we as traders and investors use it as a messaging tool to the Federal Reserve as well. It's a very interesting contract for those of you that want to find a simple and effective and accurate way to geek out on macroeconomics, meaning the number one macro, what is the Federal Reserve going to do next? All right, with that said, remember that we seem to be peaking in March and May. We may be cutting as soon as November, but it looks to be pushed out to December. And these are possible cut months, not probable, right? It's probable that we're going to peak in March or May at that 5%-ish area. It's possible we could see a cut in November or December. All right, that being said, let's jump into our calendar. All right, quick review. What's coming up today, Wednesday? Core PPI already came out. We'll talk about core PPI when I see my mastery members in the Sector Secrets Mastery, when I see you all in the Sector Foo Room. I'll see you all there. We'll talk about core PPI. Remember, if you're looking at the way in which PPI and core retail sales, and you might say, Rod, I don't know what a -1.1 versus a -5 means. It doesn't mean anything. I know. Wait a minute, Rod. What does it mean? It only means whatever it is we react to. Now, reaction can be measured in just a handful of places really easily. Look at the broader averages, look at the bonds, look at gold, look at euro. Those are really effective ways to say, what did we think ultimately about that? Look at this wick. That is a berserk candle. Two major hot zones happening at 8:30. Let the dust settle and look at what ultimately is happening in the aftermath of that. We're climbing, gang. So the ultimate reaction post 8:30 hot zone release, we seem to be bullish, and we'll see what happens at 9:30. I look for an echo. So we might see a lot of volatility at 9:30, but ultimately, if we're going to see the echo of the 8:30 reaction, we should see more follow through at the bell. All right. So let's go ahead and jump into the questions. And as always, that is what our show is all about. All right. First up, Jose, after reviewing the submarket e-learning class and comparing it to the recent volume class, sure, it brings up a few questions. For those of you unfamiliar, about 4, almost 5 years ago now, I guess, we did an initial volume class where I taught folks, all right, traders, we need to be aware of 4 factors. One of the most important factors beyond price that's overlooked is how much size is associated with price. This is a huge paradigm shift. You know, what we call submarket sonar is a huge paradigm shift away from what most traders do, which is how much volume do we have at a particular time or on a particular day. I really could care very little about that. What we're most interested in is volume at a price level. All right, the 2 questions are, when there is a value area high and a value area low, where is value or high? Well, if you've taken submarket sonar, Jose, you have the indicators. We automate that with the indicator. So just use those indicators for that. I believe, I don't know what the e-learning module, my apologies, but I know the folks who took either one of my volume classes, the indicator comes with the live version. I'm not sure about the e-learning version. So by the way, the V profile, which is one of the main tools within Volume Max, automatically plots that. So where or when do we manually have to anchor VWAP, V-score, and V-profile? Again, it's in the class, Jose. You'll see that we talked about the specific times intraday that I anchor the VWAP, which time we anchor the V-score and the V-profile. So just review the class. We actually listed that in that class. Now, one thing I'll mention, the anchored VWAP for the year, which we would apply in the daily time frame, I'm likely going to re-anchor that to the first trading day of the year, which was, what is the first trading day of the year? The 3rd. I'll probably anchor that to the 3rd at the end of this week. So when we get through options expiration, I'm going to re-anchor Jose and everyone who uses anchored VWAP. I'm going to re-anchor after options expiration, the 3rd of January for my VWAP for the year. All right. Okay. Next up, Fierce Logic. How much, if at all, do I consider VIX? Okay, let's go take a look. And I look at VX futures, Fierce, being near 18 when adding new longs. Theory behind that is when a market flush may happen. Fierce, here's my take on VIX. It's a futures contract, and that's it. It's a futures contract that if you look at the construction of it, it really doesn't, which index is it measuring, right? And you might say, well, Rog, it's measuring stocks, right? But which stocks and in what composition? And when you ask that, you realize it's really not measuring the indices that we trade in the way that they're composed. So the VIX, while I like to trade it as a standalone futures contract from time to time, like most market internals, while they are interesting, sometimes clever calculations, they are not measuring the markets that we trade in the composition of stock and sectors. And that's why I pay almost no attention to market internals for my trading decisions. But I will look at the VIX the same way I might look at corn. It's a futures contract, and if there's a trend, if there's clarity, I can trade it. So personally, I don't consider it, as you mentioned, at all. And thank you for giving me the at all option. Yeah, I don't really consider it a measurement of the market at all. Not really. There might be some interesting inflection points with the VIX. There might be some interesting levels where we could be at an extreme, and we know that psychologically there may be a shift in sentiment or expectation, but there's got to be another reason, right? So thank you for the question. All right, next up is, hey there, Praveen. Can we please look into Tesla for resistance? Sure. All right, so we're taking a look at Tesla. I'm presuming this is the daily time frame, so that's what I'll look at. Why are we looking at resistance? I love it, Praveen. It is in a downtrend. Gang, I'm not really keen on shorts right now. So it's not as if Tesla is not an interesting shortable stock. I just don't know that the short side of the market is where I have personally my focus at the moment. That being said, just to answer your question, right? I would look closer and closer to say 133.80, and then your daily price movement range resistance. So this is now based on volatility. That resistance is sitting between 141.90 and 139. So I keep an eye on those levels in terms of, looking at the short side. We cannot buy this, right? So I love that you're looking at resistance. Fantastic. However, I really don't want to focus on shorts. But that is the zone that I would focus on. All right. Next up, Easy Money asks, I have a question for you. Are you a day trader, swing trader, or trend trader? Easy Money. We don't have to choose, right? I am, frankly, all of the above. I'm all of the above. Meaning, depending on the time of day and depending on the different market structure on different time frames, from 9:30 to 10:35, Monday through Friday, I head into my Sector Secrets Mastery. That is my clubhouse, as I like to call it. And we day trade every morning. That is my favorite hour of the day to day trade. So we day trade every morning. 5-minute time frames, short-term setups, right? Ideally being out maybe by lunch or by 3:50 p.m. Eastern. Then you'll notice there's a couple of the sessions here. I'll start doing some swing trading. We cover that every Wednesday. I'll look at weekly macro and position trades. We cover that on Tuesday. So I don't ever want to compartmentalize and just call myself a futures trader or a day trader. I trade price action, volume, volatility, time. And as long as I can apply those four factors to a market, I'll trade it. And part of it is it liquid? Is it part of a bigger picture in terms of weighting within sectors or indices? So not only am I not going to say I'm just a stock trader or option trader or futures trader or forex trader, all of the above, I do all of those things. And the reason we can do that in the mastery or even in the futures room is because the tools that we use, the top system, right? For those of you that don't know, the top system, automated supported resistance with Darvis, market structure analysis with wave, grab, and multi-trend, understanding dynamic support and resistance and reversions to the mean with the 34 EMA wave, looking at classic moving average crosses and propulsion through that indicator there. So when I put all those together, whether it's a 5-minute chart or a weekly chart, I've got the information I need to find an entry and protect my downside, meaning at least calculate what the potential risk is going to be, and then trade. So all of the above, all of the above. Thanks for the question. All right, next up is Easy Money. Thank you for that. And okay, next up, hey there, David. I held Tesla overnight. What do I think about selling or holding at the open? David, the same levels that I was just giving Praveen would apply. All right. Yeah, the same levels. So that means I've got to wait let's see where we are right now. Going to wait for one of those two levels. So the first one was 134 and change. We're at 136. Well, it depends. So here, David, you could look at the 34 EMA on the low as an aggro trigger in terms of a short or long put, which is what I would do in the Sector Secrets Mastery, right? We could look at the long puts. And then, so that's one thing we could do. Where are we right now? The other thing we could do is wait for the red zone. That would be a little bit more, that'd be a little higher, a little bit more conservative. But if you want to wait for that red zone and use the volatility of the DPMR and wait for that, we're not there yet. So at the open, the only choice is the 34 EMA on the low. So we'll be right around 130. We'll be right around there. So you'll see we're about halfway between the bottom line of the wave and the middle line of the wave. That's fine, but make that aggro. In other words, don't back the truck up there because there could be some other moderate and conservative triggers above. So I scale in, I scale out. And thinking about scaling in, instead of looking at just sort of binary in and out, now we're thinking about zones, right? Zones, for example, of resistance, where I know I can build a short position or long puts, and then zones of support where potentially we could scale out of at that point what would be a winner move in it, and then start to move our stops to not let a winner turn into a loser. And that's my process. Yeah, no worries, David. There's a little bit more specificity on what I may or frankly may not do with Tesla. One thing to keep in mind when it comes to Tesla, let's think a little bit more broadly for a moment, since we have a couple questions on Tesla. And I'm not going to trade Tesla. I usually don't. And again, kind of what I mentioned before when Praveen mentioned, I don't want to be in stocks that are moving lower. I'm looking for bullish stocks. I'm not really looking at shorts. I'm not going to have here comes the cataclysm of a sell-off. I'm not going to talk in that way, because I don't see it. Right? I don't see it. One thing I will look at. Let's crack open. While we're on this topic, let's crack open the XLY. Let's do that together here briefly. So I'm going to go to the multi chart, and this is a grid that I use in the Sector Secrets Mastery. This is the way I look at relative performance. Relative to what? Well, relative to weighting within an index or an ETF or a sector, right? And then performance. Well, is it bullish, bearish, or neutral? This is the best way to do it, right? There's a lot of much more cumbersome ways and visually confusing ways out there. But I'm telling you right now, gang, take some time, create a flexible grid that's comfortable for your view, and then put in the stocks weighted within that sector or index in the order of the weighting. Many of you that are in memberships here at Simpler, Options Room, Futures Room, Mastery, you have Grab, Wave, Propulsion, Darvis, and the trade flag. I've given that through the room drives in those rooms, and you can build this layout to whatever level you're comfortable with. All right. What is looking interesting in XLY if I want to be long? Nike, Starbucks, TJ Maxx. There's your relative performance for your bullish names. What about bearish? If I want to be bearish within this group, it's Tesla. It's Tesla. Easy, right? I would also throw in Target, GM, and Dollar General. I would throw those three names in the slightly bearish camp as well. XLY itself is neutral, but slightly bearish because we're below the 200. So you'll see the advantage of finding the double greens. If you want to be long XLY, don't buy XLY. Buy dips in Nike, Starbucks, TJ Maxx. If you want to be short XLY, or if you want a bearish play, start with Tesla and make your way over to, like I said, Target, GM, or even Dollar General. Right? That's the way we want to scan and think about where the opportunities are in any market, any grouping of stocks. We could do the same thing in the S&P. We could do the same thing in semiconductors, right? Okay, next up, Navi asked, my thoughts on DXY. Sure. So the way I look at the dollar is through the euro. The biggest market on the planet of any kind, gang, is euro versus US dollar. That's the biggest market in the world. It's the biggest Forex pair, and Forex is the biggest market by a landslide. And the reason the euro and the dollar are just inextricably attached is because one goes up, the other goes down because of its relationship within this Forex pair, within this currency pair. Don't let the Forex word throw you. It's just the way in which the euro exchanges for the dollar or the dollar exchanges for the euro. If euro is heading up, dollar is heading down. And that's all there is to it, right? That's really all there is to it. And so I am bearish dollar. Now, will it break 100? Now we're creeping into prediction, right? And I don't know. I mean, if the euro continues higher, and if we continue to take out the 1-1 handle and the 1-2 handle, and we continue to move higher, then dollar is inevitably going to move lower. So whether or not breaks 100 isn't really of concern. What I'm concerned about now, and the last trade that we put on in the euro and in the dollar for that matter, was either a 6E long position in the futures or long puts on the UUP ETF, right? That's the last time we traded this thing. And the next time we get a reversion to the mean in 6E in the futures contract, next time we get a reversion to the mean, Rog, what is that technobabble? When's the next time price sinks back down into the wave? Again, a piece of the top system indicators. Once we pull back into that wave, I can look to get long 6E again. I can look to see if there's liquid calls in FXE, or you can buy UUP puts. That's the way I'm going to trade dollar. All right. Let's see. Easy Money says, do I have a trading group? Yeah, Easy Money. Head on over to Simpler Trading, or you can head on over to sectorsecrets.com, which is just an easy way to go to the mastery that we have that I hold in the Simpler Trading community. So you can check that out, sectorsecrets.com. All right, gang, be good to each other. I'll see you same time, same station tomorrow. Heads up, we have still some more pretty impactful data to come for the rest of this shortened week. And then, of course, we've got Friday's options expiration. Just call that shenanigans. Be careful with that one, gang. I'll see you tomorrow.